Apple kicking off its worldwide developers conference just a few moments. We're less than 15 minutes away from that. All right, Sarat, got to talk to you about this one, okay? Stock's down 5.5% year to date. I know that you own it, okay? And people look at WWDC and say, yeah, it's not really a stock moving event. And they're right. I mean, historically, it has not been. However, as Katie Huberty of Morgan Stanley writes, in the last 2 years, Apple's stock performance following WWDC has been more pronounced, outperforming the S&P 500. Now, is this going to be the catalyst, or at least one of the major ones, to get the stock working again? Because it's done next to nothing.
I think it's very important, Scott, because they have to reiterate how important they are to the whole technology ecosystem, and I think they're going to do it. Their products coming out will be, again, newer. The operating systems will be upgraded, and I think people will understand more and more as we come out of the stay-at-home how important the whole Apple ecosystem is to everybody, not just people at home, but also the professional side as well. So I think people will be watching to see what they're coming out with, what products are innovative, and what actually we're going to be using over and over again. It's that annuity stream that's going to push this stock higher, I think.
Doc, what's been eating Apple? I mean, really, it's been a sideways trade at best to slightly down. Are you optimistic that it's about to get moving again, or what's the problem?
Yeah, I am, Scott. And it's the same thing that we've talked about with many of the stocks, in particular in tech, that had that, that pull forward of demand. And Apple clearly a big beneficiary, as was Dell, as was Hewlett-Packard, and Hewlett-Packard Enterprise, for that matter. I mean, people bought all of these because they needed more for their home offices and so forth. So I think that's a little bit of the drag here, Scott. But I agree with Katie Huberty and, of course, Sarat. I don't see huge upside from here, Scott. We're seeing 126 calls, 127, about up to the 129 level being bought throughout the day. And that kind of tells you that people are looking for little baby steps and stabilization continuing in Apple, not for a big jump.
Yeah, Joe, I mean, you're not looking for anything great either. As I turn to you and I'm looking at my fact set and I punch it up, you think it's still going to underperform? So it's sitting at 125 as we're having this conversation.
Correct.
You think it's going to continue to disappoint for the remainder of the year?
I do. I think it underperforms for the entirety of the year relative to the cyclicals. Energy's up 46%. Financials are up 30%. Apple peaked in January. There was a tremendous amount of pull forward in terms of demand and in terms of price performance. I just think it's the type of year. I'm an investor in Apple. I'm going to stay with Apple, but I don't expect Apple to be one of the leading stocks this year.
But then does it give you a chance if I mean, there's got to be somebody who doesn't own it or wants to add more to it. Do you do it here at 125 and then wait for the bounce into next year?
I think, Apple is in a position where if there's any type of further correction, there's a strong enough buyback program that's in place that will support the stock. So I think you're okay buying it here at 125. I just don't expect that you're going to see 150, 155, 160 in the next couple of months. You could buy it at 125. It's probably going to be 125, 130, 135, or 120, right where it is now, 3 to 6 months from now.
Wow.